Welcome to another episode of EnfTrader. Today, we're going to break down two simple strategies based on ICT and price action trading. In this video, I will teach you about ICT's three drives pattern. In fact, this is one of the most powerful concepts and patterns in ICT trading. This pattern has the highest win rate when used in the proper context, and I'm going to teach you everything you need to know about it. I'll also teach you two specific strategies for this pattern. Okay, what exactly is it? So basically the first thing we need to know is the algorithm moves in 3-step along the price dimension and moves in 2-step along the time dimension. Remember this. Okay, this pattern is based on the idea that prices move in a series of 3 drives or 3 consecutive swings near the point of distribution. In each drive, the price creates a higher high and a higher low in an uptrend, or a lower low and a lower high in a downtrend. You can observe this pattern on any time frame, and it indicates that the market is compressing and experiencing a liquidity shortage. First, we need to identify our points of interest or POI on the higher time frames. This could be a fair value gap, order block, or any significant supply and demand zone. If we find ourselves in a bearish market, we'll want to focus on taking short positions since that aligns with the overall downward trend. For example, in this scenario, this FVG is where we could consider entering our trades. By focusing on the bearish order flow, we can look for opportunities to trade in the direction of the market. Let me go over it again. You need to identify your POI first. Once that's done, you can spot your first drive, followed by a pullback, then the second drive, another pullback, and finally the third drive, which will include 2 liquidity sweeps. For instance, you'll notice a liquidity sweep in this area and another one here, so that makes a total of 3 drives. 1, 2, 3. So how do you basically use this as a strategy? Okay, so I want to teach you 2 strategies based on 3 drives and ICT that I personally use both of, and they are my favorite strategies. Okay, so the first one. Let's say we're in a bearish trend, and we want to trade with that trend. First, we need to find our POI, which is where we're considering entering a trade. By focusing on this pattern, we can significantly boost our win rate. Now, if you've marked your POI on the 4-hour time frame, you can then move down to the 15-minute time frame. This approach is also applicable if you're working from a daily time frame down to an hourly time frame. On the 4-hour chart, if we determine that the order flow is bearish, we'll be looking for specific patterns that indicate potential trading opportunities. Once your POI is identified on the 4-hour chart, switch to the 15-minute chart to look for the 3-drive pattern. This pattern will reflect what you see in the 4-hour structure but on a smaller scale, and it will help pinpoint the best entry points for your trades. If we see a 3-drive pattern aligned with a liquidity pool, that liquidity pool doesn't necessarily have to be consumed by the 3rd drive. The market is currently consuming short-term liquidity every time it reaches a new short-term high. And this is how smart money creates a new opportunity for trading. After the 3-drive pattern, you should see a rejection block. This is what you should be looking for when you are in front of the chart, a very obvious rejection block, like the elephant enters to the children pool. A bearish rejection block occurs when the price spikes upward but then falls rapidly, indicating a rejection of higher prices and signaling a potential downward movement. When the rejection block occurs, you should be ready for trade with another confirmation. One of the confirmations that can enhance the validity of a rejection block is the formation of an SMT or smart money technique with the correlated assets of that symbol. I prefer to consider trading rejection blocks when there's a smart money technique. This means that another instrument has a breaker here, which should not see this low. I have previously covered the rejection block and SMT in 2 separate videos. You can see the link in description. Okay, so as you know, the algorithmic theory is based on time and price. In fact, price levels are invalid without considering time. Time, in effect, validates price. So, in this setup, the time it takes to form the 3rd drive and the rejection block is important to us. It's important that this time is in macro time. For example, a rejection block that forms at 9:25 a.m. or 9:30 a.m. New York time is very important and valid for us. After these 3 confirmations, we are allowed to enter the trade with a stop a few pips above the rejection block. You can also use a standard deviation of 2 to 2.5 for the target. Alright, let's jump on the chart and walk through an example together. So here, we've got a bearish FVG, fair value gap, on the 4-hour time frame, and price is gradually approaching it. As price gets closer and forms a 3-drive pattern upon hitting the FVG, we see a rejection block, which indicates selling pressure. That gives us one of the confirmations we're looking for, and we've got that one. On top of that, we're also spotting a SMT divergence with Nasdaq as price approaches, which adds to our confluence. Plus, it all lines up with New York session timing on the macro level, which is another solid confirmation. With all these lined up, we go ahead and take a short entry. Ideally, we're aiming for a 2 risk to reward target for our take profit. The second strategy is as follows. The price is in a strong trend and forms a good FVG, and after forming this FVG, the price continues in the direction of the trend. The price moves in a 3 drives pattern in the direction of the trend, and our FVG remains unmitigated. After the 3 drives pattern is formed, we wait for the price to take the liquidity of the 3 drives and reach the FVG. When the price reaches the FVG area, we enter a trade in the direction of the trend with confirmation. In this example, you see the euro on a 1-minute time frame. The price moved towards FVG after forming 1, 2, 3 and taking liquidity from this 3 drive and continued to move after reaching FVG. These setups are some of my favorites, and I use them often to enter trades. Just keep in mind that no setup has a 100% win rate, so make sure to backtest them before using them. Thanks for watching the video. If you have any questions, feel free to ask in the comments.